I welcome all the participants for today's session, and I thank Vinay sir for accepting this invitation for our today's session. And I hope so that it will be very enlightening for all of us, because this is a hot topic in our real estate sector. And after RERA, a much more importance. This subject has gained a lot of importance, because in RERA we have to disclose all the details, and when we disclose sales, say, sold, unsold details, automatically the GST comes into picture, and we have to properly record everything, and all the details which are recorded in the RERA needs to be matched with the GST. So there are certain issues, and whenever I have attended any sessions or given any sessions in the GST also, I've seen that a lot of people are facing many issues. There are many confusions in this particular subject. So hope so that to a great extent our all the confusions will be solved, and definitely we are looking up to Vinay sir, and hopefully we get all the answers to our questions. And thank you once again for accepting our invitation, Vinay sir. Over to you, Dilip sir, for his formal introduction.
Thank you, Aditya ji. And I don't think you have left anything for me to introduce him. He is already core team member. He is in the group. Only thing, special privilege which I can share with all members here is he is not from the WRC. He is from the Southern Regional Council. That is one unique area, you can say. Secondly, everyone has got some special character in life. So what he is really, maybe I know something, but most of you may not be knowing. He is a very a noble, humble, and dynamic chartered accountant. No one can see, and he's down to earth person. No one just predict he can be so accomplished, and he's so social in nature, and he's so creative that we all keep on thinking कि हमें expand करने के लिए coming together, going together formula अपनाना चाहिए. But he is a live example. He is having in 5 southern states his presence, his association as a chartered accountant. He is a senior partner of his firm, Venu and Vinay, and he's practicing since he got CA in 2002, and more proudly saying how much proudness he can feel, I don't know, but I am proud to see that as a chartered accountant, our fraternity member, he is contributing 10% of his income from the profession to orphan organization Nele Foundation, and he is one of the trustee, and he is taking responsibility of 200 orphan child, and that is the kind of thing which we can take from his life in our own life. And today's topic is most of you and myself also were thinking from the perspective of GST, but no one could have even predict beyond GST can be something. GST के तो हमारे पास बहुत सारे बॉम्बे में स्पीकर मिलेंगे, लेकिन साउथ इंडिया से हम लोगों ने एक ऐसे मेंबर को ढूंढा है जो कि he will be telling you not only on GST, he will be telling less on GST then more on the intricacies and implications because of the GST and the online every information available on the RERA site, and that is the very eye-opening, I can say, topic for us all the members. And without taking much of the time, I will request our Vinay Thyagaraj ji, please take up from here and enlighten our members.
Thank you, Dilip sir. Thank you so much for your kind words. It's really inspired the way that you have introduced me. It's all with the blessings of my elders, especially my parents, my grandparents, and the teachers who have learned a lot. Without their advice, without their directions, I wouldn't have been a human like this in today's world. Thank you so much for your kind words and about our firm. let me start my presentation. As you mentioned, I'm the odd man out. Like I'm from the southern region, and I also proudly say that like I associate with all the regions, at least for the topic of this RERA. I'm associated with the north and also the east with the Bengal, West Bengal region, and the northeast states also actively involved with them. And also Gujarat, of course, Gujarat comes under WRC. I actively involved with the Gujarat professionals also. And I'll tell you that this is a topic which is very, very close to my heart. And since the inception of this act, my 60% of my time goes in only on this act and on to the subject of RERA. And I'll tell you in the upcoming slides like what made me and how all this can be a area of practice to our members, what all can be the ways to look at this RERA as something which is an entry to the real estate practice itself. And also, of course, I'll touch upon the GST in terms of through RERA. And as I mentioned, one thing I would like to mention to the participants here, I am not a GST practitioner for your information. My partner Venugopal practice on GST. I am not a GST practitioner, but to an extent of what is required for the real estate, I have insight idea into it. And every facts of the case will is a different, and the opinions and the solution also could be different from the case to case basis. So I'll try to bring some of my experience during these last 5 years of RERA implementation in the real estate and also the impact. And as a professional, when we advise to the clients, when we advise to any of our associates, what is required for us to look into before we advise and what could be the outcome of it, that I can share you during my presentation. These are one sentence always I admire about this act. RERA is just not an act; it's a practice of real estate. Why I say is like we all know that this is a very small piece of legislation of 90 plus section, and entire industry is regulated through this section, through this act. You may say this may have about 92 sections, and of which 19, section 1 to section 19 is mostly operative sections for the practitioners, unless somebody practice in the litigation aspect of it. These 19 pages, 19 section of an act will not more than 20 pages. The 20 pages has inbuilt practice of the real estate, entire practice of the real estate, entire industry, entire business of the real estate has to pass the test of this RERA. Then there's something which one can appreciate about this act, one can appreciate about this subject, one can say the depthness of this subject. Recently I was talking to the members of one of the branch in Karnataka. I did mention that if some of the aspects of the RERA, if they're not able to satisfy, they may not be in the business of the real estate itself, which I can say proudly say that RERA talks about the registration aspect, pre-registration in terms of the deciding on the feasibility and the scheme of the project, having registered, when they should launch the project, having launched it, how to collect the money, having collected, where to deposit the money, having deposited, how to withdraw it, having withdrawn it, how to utilize it, how the sale agreement, how the sale say agreement of allotment letter, how the booking form to be there, what should be the content of it, in terms of having entered into the sale agreement, what would be the schedule of the payment, what should the schedule of timelines of the delivery of the product or a project, and in terms of the funding aspect, who are all the stakeholders which are involved as part of the project. It may be an investor or it may be a banker, it may be a financial institution, how they will fund it. If they fund it, what they get right into the project, whether they get a first right or the subsequent right compared to the allottees. So having funded it, then the moment they completed the what does that mean? It's a completion. We have a occupancy certificate. We have a concept of completion certificate. What does mean a completion, which is defined? Having completed, how to convey the common areas to the association, and what should be the responsibility roles of a promoter in the project, what is the duties and functions of the allottees in the project, and how to market the project, what should be the marketing, veracity of the marketing. Entire aspect of the real estate is captured in a small capsule called RERA Act. And if we look into deep about it, every aspect of industry is captured. And I don't experience, we do not have a solution to this of the practices of the industry. Of course, there is a huge gap between what I want is and what the act talks about, because this is a radical change in the industry in terms of the way the industry practice and the what the industry should practice. So maybe it may take some time for the industry to accept, acknowledge, and also appreciate the intention of the act, and also the inbuilt provisions which protect entire stakeholders of the industry. It is not only the protection of the customers, because it's a misunderstanding that most of the reader of the act says that it only protects the customers, it only protects the allottees in the project. No, if you see entire act, read the section 32, there is a much powers which are vested with the authority to recommend to the government and also insist to implement various aspects. One of the thing which I can say is the Maharashtra, the stamp duty reduction or whatever maybe, industry wanted it, even the RERA also supported through the recommendation to the government. So like that, this industry, this regulatory is has a more work to do to protect every stakeholders of the industry. So that is what I always say, that it is not just a piece of a legislation, it goes beyond that. So it always enticing me, it always inspire about this subject of this real estate and especially the RERA. And today's session, I try to touch upon the something which is related to the RERA and the GST. So I'll touch upon the background. Of course, most of the members here is aware of the RERA background and also the GST one. But at least for me to compile and compare, put it in a one slide, I'll explain about the enactment and the jurisdiction. Few definitions will look at the RERA and also a GST perspective, how it will considered in GST. And also during the transition, we know that 1/5/2017 is where RERA is applicable. During the transition, what happened and what is the implication? Of course, we are in 2022. Is that relevant for us to go back and check what happened in 2017? To my answer is yes, because without knowing background what happened, I cannot go forward. And still some of the cases, some of the complaints revolving around this itself transitional. We all know that various project which is not registered, and authorities are sending a notice stating to register the project to till date also, because most of the promoter have taken the shelter under the various I can say that various ways and means of understanding or misunderstanding the act itself. And over and above, most of the states have defined what is the mean by ongoing project. With the definition of an ongoing project, many of the projects have out of RERA, and of course that if not today, it may be the down the line to come. Supreme Court will pass an order that every project has to be registered in accordance with the act, even though the rules are there, and rules cannot override the act. We are all aware of it, but it's not the far away for us to look at the see the day for it. During the tenure of the project, we are all aware that there is a periodical reporting called quarterly update, which we update quarter on quarter, and also year on year we have an annual audit and other compliances. At the end of the project, as I mentioned, that there is an entry and there is an exit. Entry is a registration, exit is a completion of the project. How it impacts? How do I see the entire aspect as a project, and what does the GST how the GST has an implication on this, I can explain you in the down the line of the presentation, and also the various compliances levels. As a professional, entire aspect of the entire aspect of my profession is depends on the books of accounts maintained by the promoter in the project. So how do I certify, and what would be the level of maintenance of books of accounts, and also how do I rely upon those books of accounts? Is it a limited review for me to issue the certificate on quarterly basis? Should I go through in depth to understand and audit, watch, and also to report that? How will have a direct implication on my GST? Finally, I have very interested and decided cases which I personally appeared, so I can share with the participants. Friends, on the screen you can see that there is a RERA and GST. Both are central government enactment, and both are in the 2017. About 2 months gap, both the act has been enacted, and we all aware that even though RERA is a central enactment, but state has a jurisdiction in terms of the monitoring, supervising, and also regulation. And the GST, we have central and state government, both have a jurisdiction. We all know that excise and other central governments is part of the GST, and they are also regulate as part of this. And officers to regulate the act, the RERA is always a state, and GST comes the state and central officers involved. Amendment to the act and the rules, as you know that GST is like a very weak amendment, a very weak notification. It's a very dynamic, I say that. In my 20 years of practice, I haven't seen any act so dynamic as GST. And why I say is every week there is some regulation, some notification, some clarification, some press releases. So that is called, I call it as a very dynamic. And also amendment to the act. I remember in 2016, one amendment has been took place. After that, there are no amendment to the act itself. And rules also, I come across in various states. They amended the rules for the sake of clarity. And we all know that RERA is for the real estate, GST for all the industries. Revenue earned, again, it goes to the state government and the state and central for the RERA and GST. This is little about the RERA and GST. We always say that the game changes for the real estate. It is not only the RERA and also the GST, because of the cost compilation, cost comparison, cost escalation, and also the tax play a very vital role in, especially to the real estate. And if you say approximately about 20+% of the input goes to the real estate is suffered by way of the indirect taxes. Leave apart the various other levies by the state and the central government for various type of plan approval, water connection, electricity connection, and environment says, labor says. Those are all comes to about 13 to 14%. Effectively 20 plus 13, about 34 to 35% of the money which collected from the customers, money collected from the customers goes directly to the kitty of the government. And also it's not an exaggeration. There was a study done by the NAREDCO, National Real Estate Development Council. They have presented to the government, and also they have shown to the government the levies by various state, central, local authorities, municipalities. In for a real estate, it goes from 34 to 42%, depends on the place to place. 42% is a very highest number, and that is what is the total contribution by this industry to the state or the central exchequer. As I already mentioned, I just wanted to remind this: I'm not a GST practitioner, and I am open to receive any type of input or any type of comment which makes or make the presentation better. During the presentation or even post presentation, members, you're free to comment on the same. Friends, this is a simple slide. We all know that. I hope most of you are aware of the GST, and also know the basics of the GST for the real estate. With that view, I just talk about the few GST without going into the very depth presentation on the GST. On the Schedule 3 Entry 5 and Schedule 2 5B is the two aspect which is mentioned in the GST in case of a sale of land and building. First, where in the 5, entry 5 is basically where they have received the completion certificate for a project. There is no levy of the GST. And where the entry 5B schedule 2 talks about project is not completed, not received the completion certificate, then the supply of services are a track where GST is applicable. Why this slide I have brought it in the first instance is throughout the RERA, I should see that what do you mean by completion certificate? What do you mean by a completion? When I'm eligible to say the project is completed, when I'm out of the GST, and what is the point I should communicate it to my customer stating that, or the prospective customer stating that there is no GST on the project. The moment there is no GST on the project, should I increase, should I enhance my basic price in the project, because obviously there would be some of the cost which is inbuilt for me to collect from the customer the moment I don't have there is no GST on the project itself. So as I mentioned that Schedule 2 and Schedule 3 is here, which talks about intended for a sale to a buyer wholly or partly, that is for the construction service. And we all know what is the rate of GST for the real estate. And of course, 1/4/2019, we have a cutoff point where in case of an ongoing project not received the completion certificate, they had an option to continue with the older version. However, any plan or any commencement certificate which is received after 1/4/2019, there is no option other than to consider the 5% or 7.5% GST rate. Members, are we here?
Vinay, can you put on the slide so that full screen should be?
These slides are, can you see the slides, sir?
Yeah, we can see, but it is divided in two slides are seeing at a time. So if you go for the slide, so full screen will be.
I think the speaker notes are on, sir.
Speaker
Notes are on. Have you prepared any speaker notes?
Yeah, voice is clear. Voice is no doubt. I am listening the full sound. Only you can go for the slide so that the whole screen will be for the slide.
Okay, sir. Okay, fine then. Let me try how to do that.
On the top display settings.
Yeah.
In the PPT or in the this one, sir? Zoom. Display
Zoom.
settings. Okay,
Yeah.
okay. Display setting.
So we have presented view and slideshow. See that?
Okay, is that okay, sir? Now?
Yes.
Okay, thank you, sir. Thank you very much. Yeah. So as one of the important sentence I wanted to mention to all the members here, RERA being the regulator to the industry for the real estate industry, the definition of RERA carries a much weightage compared to any other statute, which is also proved, which also has been considered under various acts, direct tax or indirect tax, where both these are largely referred the definition under RERA, post implementation of RERA. We are all experienced that whether the definition of apartment, whether definition of a promoter, whether definition of a project, definition of a carpet area, definition of commencement certificate or the completion certificate, all are the definition under GST is referring back to the RERA. However, few of the definition which is missing in RERA, only those definition the other statutes are trying to define. Otherwise, the statute RERA definition stands hold good for the GST also. And these are all the definition which I would place before the friends, and I will not discuss you and I will not deliberate on the definition. Just only I am bringing to the members stating that there are the definitions which is very common to RERA and the GST. One of that definition is section 2E is the apartment. We all know the definition of apartment in RERA, which includes everything, which includes everything. And apartment in nomenclature, we feel that it's only a residential unit. However, the definition under RERA section 2E is a very expanded one. It includes your office, showroom, shop, godown, anything you call it as is called as an apartment. And we should be clear that apartment doesn't mean it's a residential. Why I'm insisting in this is because without having knowledge of RERA, somebody deals with the GST, and if the client says that the apartment, and that doesn't mean it's only a residential apartment, it also include the commercial, it also include anything which of the which other than the residential also. So that is why I say that one should understand the definition of RERA in perspective of GST. Next is a very big definition, which is the carpet area. Friends, you all know that the carpet area is something which is a radical to this industry, and nobody has thought that the industry will get so much of watertight treatment in terms of the value, in terms of the measurement. I have written one article called Real Estate Unit of Measurement. So we know that there is a measurement for to buy a petrol, which is a liter. To buy any solid item, it may be a kilogram. But when it comes to the real estate, what was the unit of measurement for a real estate? Till RERA, there is no common unit of measurement was available in the industry practice. Something is different for me, something is different for somebody. If somebody is very creative about creating something, they would have been, they would be successful in creating that. That was the pre-RERA. And now look at that. What is the unit of measurement under RERA is the carpet area. So now I have a objective to satisfy under RERA, objective to accomplish under RERA, which is called a standardization. If you look at the intention objective of the RERA, one of the is the standardization. You go to Kashmir, you go to Kanyakumari, I need a same unit of measurement. And friends, in spite of 75 years of our independence, in spite of existence of this industry over 75 years, we did not had a standard unit of measurement. But we can't blame anybody. It's something which it's a thing which we should be ponder ourselves why this happened, and were there not enough efforts or attempts made to make it as a standardization. So post RERA, the standard unit of measurement is called carpet area, and which is a very radical shift in the industry itself, because entire commercial transaction between the allottee and the promoter revolve around this carpet area. Carpet area is a very important terminology, very important subject for the professionals to understand how it impacts the builder, how it impacts the taxation as a whole, how it impacts the profitability of a project. Friends, in the last 5 years, I have done extensive work on this topic itself on the carpet area. What would be the sensitivity analysis of a carpet area in terms of a project? Friends, we all know that something called super built up area, something called saleable area, and I do not know what is Maharashtra talks about. Can somebody say in a chart or something how the apartment would be sold, or apartment was selling prior to RERA? Can somebody say? In the South India, few states say saleable area, few states say super built up area. What is that Maharashtra follows?
Built up area, super built up area, like that.
Okay, sir. Good. Thank you, Deep, sir. Built up area, super built up area. What is the definition of a built up area? Who defined it? And what is the definition of a super built up area? Who defined it? Built up area.
They themselves with the help of their architect.
Yeah. So built up area at max, I can get it from the planning authority. Okay. In the plan sanction, they mention the built up area, but Industry is not selling the built-up area; they're selling top-up above that. Okay, we know that sandwich with the extra cheese, extra paneer, so they call it as a super built-up area. And as a professional, even I'm not sure how the super built-up area is calculated. Go back to any architect or an engineer, ask them to define what is a super built-up area. Nobody has an answer. There is no scientific way. There is no standard way to calculate the super built-up area. You go to the same architect next year, he will say something else as a super built up area for the same work he has done it. So to that extent, there is a I can say it's a flexibility. There is, it may be a good or bad. That was the industry practice. But the unit of measurement is something called is taken away by way of carpet area. Carpet area is a unit of measurement which is clearly defined, which nobody can question on this carpet area at any more. And it is very clear and very accurate. I, as a customer, I, as a alati, I can measure it by taking any of the measurement tape, and I can arrive at my carpet area of my unit. So you might wonder why I'm talking so much of this carpet area in this session. I'll tell you the impact, and one of the live cases we are handling. It's a 100 apartment project, and builder wanted to do something good to the project to the customer, but he landed up with a trouble. I'll explain you what is that. We all know that something called affordable residential apartment, where carpet area is less than 60 square meters in a metropolitan and also 90 square meters in other town, and the gross amount charge is less than 45 lakhs. I have a client who have done all the feasibility study, and in the interest of making this project very affordable, very viable, very profitable to him and also the customers, he has done the good work and he has done all possible benefits to pass on to the customer, including the profit on the taxes, because he has taken the benefit of 80 IBA, 80 IBA, where the affordable housing as per satisfy the conditions of 80 IBA, there is no income tax. Friends, almost about 33%, or in case of more than 5 crores or 10 crores, there may be a surcharge is more. 33% of the profits on the income is saved if you satisfy the condition of the 80 IBA. But because of a small mistake, because of something which they have not forecasted, they lost and they have landed in the trouble. I'll tell you how this happened. This is what is the unit of measurement I was talking about. Is a unit of measurement for the real estate. With reference to the real estate, this is what one should transact with, which is defined in the RERA. And also GST says for a carpet area definition, please go back to the RERA. Where all GST has a reference of a carpet area in terms of where there is a we all call it as a REP or RREP, where percentage of commercial area is more than some percentage of total area, carpet area, then whether it classifies as only a residential or a commercial, and accordingly GST are levied accordingly. So there again, GST is revolving under carpet area. The GST is not looked at built up area. GST was not looked into the super built up area. Again, GST stick onto the carpet area only, because so GST is respecting, GST is considering what this industry is agreed, what this industry is trying to follow, what the industry is trying to standardize these practices, and also to ensure that everybody is of the same footings, everybody would can be validated with the numbers which they provided. So income tax also directly definition of a carpet area. So it's very important for any professionals to consider the real total value of the carpet area. Friends, you may disagree with me. As a chartered accountant, why should I look at this as a carpet area? Is it the responsibility of either a engineer or an architect to arrive at whether this carpet area is correct or not? Yes, true. You're perfectly all right. It is a responsibility of other professionals who are responsible to calculate this. But as a chartered accountant, I am protect my client, protect the promoter in terms of any financial risk. I play a very vital role under the RERA than architect and the engineer in various aspects, and our chartered accountant certificate weight and which gives a much more importance to the than any other professionals under RERA. I'm not degrading or not denying, and I'm not degrading any other professional, but the certificate which gives by a chartered accountant has an absolute number for somebody to take action on that. That is what I'm trying to say, that chartered accountant certificate has more weightage, more value than other professionals under RERA. So important for the promoters to arrive at the correct carpet area, and as a professional, as a chartered accountant, I ensure that this carpet area is correct, which is given by an architect. On various ways and means, I have to calculate, I have to measure it, I have to verify it. Friends, when I advise any clients for a real estate, the first document which I ask them is the two documents. One is the planning approval letter, the license with the approval authority gives. Second is the building sanction plan or the layout plan sanction. This is a two base document for us to understand what is this project is all about, how the approval has been given. Based on that, the scheme of the project can be arrived at. Based on that, I can start giving the advice. Without understanding, without reading these documents, if you start advising the client, then that becomes limited only to that. You cannot see the bigger picture. We cannot know the entire aspects of the project. Then if I restrict myself only for the registration, you give me the document, I will scan, I will enter, I'll upload it. Then what is the value addition as a professional I am giving it? And of course, then my service may not be required. I can ask the promoter to meet a couple of my assistants. They will take it, they will collect the data, they will do the data entry and get the registration. And if the information is not correct, don't blame me, because you have given it. So I will just only entered it. But as a professional, if you are serious in practicing in RERA, serious to be in the field of this RERA, please understand the document which goes into the RERA portal are validated thoroughly, understood thoroughly, and also the details document which goes into the portal is correct, accurate, or nearly to the accurate, by understanding the various implications of RERA and the GST and any other statute also. That comes by way of our curiosity of participation and also interest to practice in this area. And also all our documents, whether it may be a booking letter, whether it may be allotment letter, whether it may be agreement of sale or a sale deed, all subsequently in terms of deed of declaration for to register for a project or any other communication, only the carpet area is the measurement for us to mention it. Maybe if you of may have a question that is the carpet area is sufficient, should we mention the saleable area, super built up area, built up area? Yes, I understand that even as a customer, a 1200 super built up area, now post carpet, post RERA, it is only a 750 carpet area. Even I as an individual customer, I feel low when I say it's only a 750 versus 1200 of the prior pre-RERA practice. Maybe to satisfy everybody, 750 is a carpet area. Below in a bracket, you mention 1200 as a built up or a super built up area. And also this is the one class which is as part of the agreement of sale. Why this carpet area is important? I hope the similar paragraph is also available in the agreement of sale Maharashtra or any other region. As we know that the price of the unit is based on the carpet area, and promoter shall confirm the final carpet area after completion of the project. Any changes into the carpet area, it may be reduced or it may be increased, and the increased or decreased, reduced or increased shall be calculated, and compensation shall be paid or amount may be collected from the allottees, depends on the increase or decrease. This is what is the part of the sale agreement. So instead of 58 square meter, if it comes to 60, so 2 square meters of excess carpet area can be collected. But in the state of southern state in Karnataka and Telangana RERA, they say that up to 3 square meters of the up to 3% of the variance promoter can collect. In case if it is goes beyond 3%, then the promoter doesn't have a right to collect. That is what Telangana and Karnataka has restricted. And other state which is left, which is proportion to the increase or decrease, you collect or you repay the compensation. So this is one of the thing which I wanted to place it before the participants. So this is the facts I was mentioning, that how the GST has impact on RERA. Friends, as I mentioned, that this client has meticulously has done the work of getting the benefit under income tax, under 80 IBA, under GST for affordable housing, and various other scheme of PMAY for the purpose of subsidy for the loan. So he has made a plan such a way that it's a beautiful, and he could able to sell a very good piece of project at a 44 lakh rupees of the price, and stating it's a 59 square meters of the carpet area and a 20 square meters in the sharing in the common area. It's about 79 square meter of the saleable area for a 44 lakhs. It's a very beautiful project and value for money project. That value for money project has been brought in by the promoter, considering all these benefits which is available to the customer. And accordingly, 1.5% is a GST rate, which is applicable to the affordable housing, minus 1/3 of the land deduction. So effectively 1% as a GST rate. During the construction, for whatever be the reason, he has moved from brick construction. We know that prefabricated bricks to the MIVAN technologies for a purpose of faster construction of the project. Faster construction of the project. When they have taken change in the specification of the bricks to the MIVAN technology, couple of misunderstanding or couple of I can say that negligence or a couple of casual has been found with the promoter. When there is a change in the specification, section 14 attracts, he failed to communicate it to the allottees in the project. From the brick construction, we are moving to the MIVAN technologies. That is the first casual approach he has taken. Second is, he is of the impression that I'm giving a better technology. Why customer will disagree with that? I'm giving the delivery of the project well in advance. Why customer will deny to it? So those are all the answers he has given when the when he lands up in a trouble of this. On completion of the project, they found that it is 62.5 square meters of the unit. Unit is into 62.5 square meters. They were happy. As a customer, I am happy. As a builder is happy. Is delivered 3.5 square meter more than what intend to deliver it. But it doesn't stop it there. When they raise the demand for excess 3.5 square meters, customer agitated to pay. Customers did not pay. See, 3.5 divided by 59, it's almost about 5% is a consideration difference in terms of the project. That is 44 lakhs into 5% is 2.2 lakh rupees per unit. It did not stop it there, and this 3.5 square meters is surpassed the benchmark of 60 square meters of the GST. They lost the benefit of 1.5. They moved to the 7.5% of GST rate. They ended with the land. They landed with the trouble of that, and it did not stop it there. Of course, income tax benefit he lost, but there were no profits into the project because of these challenges, and he did not end up with paying any taxes because it ended up with the loss. So this 6.5%, so this 3.5% increase in the carpet area, wherein 1.76 crore, 1.76 lakhs of GST per unit he lost. He's paid out of his pocket. On 100 units, about 1.76 crore rupees of additional taxes he has paid out of pocket because GST department did not allow him the concept of affordable housing because each unit is beyond 60 square meters, where he himself has communicated to all the customers it is 62.5 square meters and please remit the differential GST. Of course, we know that customers' behavior when the promoter communicate to pay the differential or higher amount, as a human being we will deny it, and this was not back up by the legal backup of to protect in the agreement or in any other communication, because in turn the all the customers put together and reached RERA stating that section 14 violation. So he has not communicated to us, requested the authority to levy a penalty under him because section 14 is not complied with, change in specification from the brick construction to the Mivant technology. So this is what is the sum and substance of importance of the carpet area under RERA and also how it impacts the GST. So while we advise any of the customers, any of the promoters, look into the carpet area as one of the important topic, important aspects, and discuss with them while advising the promoters of the project. You not only the promoter, if you are individual customer, it may be purchased by your relatives, friends, or your clients. When they come and ask you an advice about the project or the product, you have to look at that the unit price and also the unit of measurement of the carpet area for them to advise it. Second, we all know that the difference between the carpet area and a built up or a super built up area, we call it as a loading factor. The loading factor may range from 23% to 60%, depends on the type of the project, size of the project, location, requirement, costing, and all those things. So that's a big topic to discuss itself and also deliberate on that. I'm not touching on that because when the moment you have a carpet area and total built up area, so the difference of is called loading. How much is the loading factor to be considered is one more aspect to be considered. Why I'm saying is prior to RERA, this was not in existing. Prior to RERA, even though the builders used to mention there is a carpet area, the carpet area was including your balconies, including your utilities, including your veranda, including the open shaft. Those they used to mention as your part of the carpet area, and none of us were serious about it. None of us were serious about it because either the ignorance or arrogance in terms of our knowledge or in terms of the transaction. Post RERA, this has brought a radical thinking on both the customer point of view and also on the promoter point of view. And further, as a chartered accountant, when I certify myself in a CA certificate, we certify in CA certificate in Annexer A, Annexer B, sold inventory, unsold inventory, unit number, carpet area of each unit. Are we certifying properly? What is the source of that carpet area? From where did I capture before I certify? Do I got a proper backup before I certify it? So that is a one way, one more for as a chartered accountant to ensure. You may not be involved in advising the promoter for a carpet area, but however, if you are issuing a CA certificate, please ensure that total carpet area of sold and unsold shall match with the total carpet area which is mentioned in the approval, registration approval. If there is any difference in the carpet area versus approval versus your sold and unsold inventory, escalate to the promoter, collect the reason for the differences, and you can qualify in case if you want to qualify it in the CA certificate. These are one more reference of a carpet area in our practice. Then we know that there is something called under GST real estate project and residential real estate project, RREP and REP. When this was introduced in 1/4/2019, it was a very hot topic, hard discussion. How do we calculate this? What does mean a REP? What does mean a RREP? And all those things were discussed in detail. And discussed and deliberated in a very greater extent. And those time I was also involved to explain to various professionals, GST professionals, in terms of the what does RERA talks about, how the carpet area would be calculated under RERA. So that was a time which I explained in the to the various GST professionals about the carpet area and how to calculate. It's a very in a simple words, it talks about a residential real estate project is considered as a residential real estate project if the carpet area is less than 15% of the overall. It's a very simple, but when we take it and started calculating it, there are challenges, and there are some of the inherent requirement for us to understand how this to be calculated and put it in a better way, so that there will not be any additional liability under the GST. We know that what is real estate project. GST again says go to the RERA 2ZN, which talks about the real estate project. It defined as a real estate project, a building or an apartment. Again, apartment as we defined under section 2E. And second is development of land into plots. So this real estate project has something called a development of a building and a development of plot. Both are defined under the definition of a real estate project for the purpose of RERA, and GST has said please refer to the RERA for a real estate project. As I mentioned that this is one of the cases of less than 15%. As we all know that 15% of the carpet area of the is qualified for a residential. In case if it is more than 15%, what happens is it falls into the 18% full GST with the proportional ITC. One can avail it, and whether to go as a separate project. Why I'm saying this is I have to advise my client, look at this is a RERA and this is a GST. You have a limitation of the 15%, limitation of a 15% as the carpet area, wherein you have to consider the tax on this portion of this area if it is go beyond 15% as the full GST rate. Have to study. In case when I study it, if makes sense for me to cut the project into two pieces. One is purely a residential. I'll go and register as purely a residential of only those units which fall under residential, and I'll take another commercial area which if it is causing more than 15% as a carpet area, I'll register as a separate commercial. The moment I register that as a commercial, then obviously my 100% ITC is available. I need not to struggle myself to look at what is my disallowance, how much I should reverse it, what should be my percentage of profit between the residential and the commercial. Those are all the again jumbling, again satisfying, convincing the auditors is requirement, convincing your statutory auditor requirement, convincing the authority, builders are required for that. Then instead of doing all those things, I can put the commercial as a commercial area, residential as a residential. Maybe I have to have two sets of accounts for this residential separate, but commercial separate. But I will have a peace of mind, number one. Second, I will have a certainty of the aspects of it. Dilip sir, you raised your hand. You can ask the question, sir. Yeah.
Yes. At this point, I will ask you one question. Suppose
Please.
some of the project which is having more than 15% of as a commercial area, right? As in the RERA, it is allowed to have the phased registration, right? Suppose there is one single building wherein construction of commercial is more than 15%, and builder is registering the commercial as a separate real estate project and the residential as a separate project, but land is common for everything. Is it allowed for the income tax benefit or the getting the benefit of status of the residential? under the planning authority? Because most of the time, what happens in Mumbai, documents from the planning authority are common. They are issuing the one single document for the layout.
Yes, sir.
Yeah.
Dilip sir, that is a general practice across India. Okay, it's a single plan approval. The plan approval have a residential and a commercial. Sometimes if it is of a larger development, I have a future development also to be mentioned. When I have obtained the plan sanction in a single plan showing the residential and the commercial, section 3, explanation to section 3 of the RERA permit me to register as a phased manner. Based on the scheme of the project, based on the development which I intend to do it. So again, it referred back to the RERA section. Explanation to RERA section 3 is very clear that I have an option to register with the phase. Subsequently, GST has also given a clarification in case of a phased development. Each phase is considered a separate project for the purpose of GST also. So it is very clear now. At least it is settled now. It is settled now, and also in couple of cases we are given a very strong opinion, having considered the pros and cons, benefits, cost benefit analysis. Because by doing this activity, either to go as a separate project or have a single project for the purpose of RERA. So the way that we registered with RERA, the tax impact on the GST is there. Okay, so that is where I say that as a professional, I should know what is this RERA, how the RERA works. Then I can give a better benefit, better suggestion on the GST. I always say to various professions who practice on GST, before you give a professional advice to a GST for a real estate consultant, real estate promoters, please take one advice with the RERA practitioner. Whoever practice with RERA, please discuss with them, stating that this is what I'm telling to my real estate client. He's in line with the RERA, and is it practically I can achieve it? Because as I mentioned that RERA is a regulator to the real estate. Is a regulator to the real estate. It is not just one registration. You can do something. It is like a SEBI for a investment, RBI for a bank, IRDA for a insurance, TRI for a telecom. Real estate, RERA is something which is clear that real estate comes under RERA. Nobody can challenge this authority. Nobody can challenge the order of this authority. You tell me as friends, how many of you have succeeded with the explanation of the promoters in terms of anything which complaint filed by the customers, allottees? Most of the times I cannot, because it's in the reality. It's in reality. There cannot be opinion on what you have done as a real estate. Like any other product, any other industry, real estate is something which is visible, which is there in front of you. We cannot deny on that. So that is a challenge, difficulty we have with this industry. It's a very unique industry compared to any other industry. One reason is what we sell is an idea. This industry sells an idea, not a product. We start with the selling of an idea, start developing a product. During the product development, there are various changes required for whatever be the reason. There may be a good reason, there may be a bad reason. But the idea, the moment reaches to a product, always there is a change, at least ranging from 5% to 50%. We have seen the changes by the time it reaches a product. So that is a difference of this industry compared to any other industry. So utmost important, utmost care should be taken while advice to this industry, because stakes are very huge. Not like any other industry, you can come out with that. Stakes are huge under this industry. So please have a consultation of a RERA before you advise on that. Yes, Rashmi madam, welcome.
Yes, sir. I wanted to know, like, when we are going in for redevelopment, because we offer the residing flat owners more land, so more flat area. So that time when we are getting the money from them, what is the GST play on that? Should we treat it as advance, or like what exactly should it happen?
Okay, madam, the same question Dilip sir also asked. As I mentioned that Dilip sir, first question was that when he spoke to me, please can you touch upon that redevelopment aspect of the real estate?
Right.
Madam, honestly tell you, redevelopment concept is there in only in Mumbai. In entire India, even not other part of Maharashtra, so only in Mumbai at this point of time, because we are all very youngsters, very young in terms of the development itself compared to Mumbai. Certainly, we are working on one project. We have started working on one project in Bangalore. This is a first project for a redevelopment in Karnataka itself, or I can say in South India itself. We are working on it. I will share my input on that. Maybe by next 15 days, we are putting the numbers. We are putting the possible ways to calculate what would be the department stand on those things. It's a very important, because there is they required little more intrusion into this topic of a redevelopment, because the customers don't want to pay. That means existing owners don't want to pay, but builders end up with paying the huge money in terms of the tax aspect of it. I'll come back to you, madam. Second important aspect of the
Okay, sir.
redevelopment
Thank you so
is,
much.
yeah, thank you, Rashmi madam. Redevelopment is most of these properties are centrally located. The value of these properties are very high. The stakes for anybody is very high. Tomorrow, a builder also will not. Builders also don't want to take a risk of like carrying unknowingly. It's an indirect tax, not a direct tax. So direct tax of indirect taxes of not only the taxes, interest, penalty, everything would take away entire is net worth of the business itself. I'll come back to you on this topic, madam. Okay, we are working on it. Maybe another 15 days. I'll come back to you on the concept note on that. And I wanted to thank the Mumbai speakers. I heard this redevelopment concept about 1 year back in one of the program. That point of time, I was speaking to a couple of my other partners. They said, to get a redevelopment project in Bangalore or South India, it takes another 10 years. Don't worry about it. We do not have a redevelopment concept, because Mumbai is matured. Mumbai has a law for a redevelopment. There is, I hope there is a law for redevelopment, right?
Guidelines under the Societies Act.
Okay, guidelines under the Societies Act, and also Planning Authority will also some guidelines, if I'm right. Is it so?
Yeah. Obviously, these are the frequent, say, under redevelopment, SRA projects, MADA projects,
Yeah.
projects, fresh land, collector, various, whatever world's difficult things will come in the land, these are in Mumbai.
Yes, sir. Yeah. So that is why I always say that if you live in Mumbai, you can live in any world, any part of the world, or any part of the universe itself. Okay.
But sir, we are not getting work from the outside country to generate more revenue for the country and for
Yes,
ourselves.
True, sir. True.
I had one more question. Like, if we go phase wise, then it is very clear. But in some cases, like the builder in the small township is making this Pradhan Mantri Awas Yojana flats and the other flats also. And in the other flats, there is also the commercial area aspect. So what should our action be?
Madam, there is no straight answer to it. Generally, when we advise on the PMAY scheme, we look at 5 various aspects. What is the government benefit for the scheme itself? There are various schemes under PMAY by the state government and the central government. Second, how bankers are supporting to it, because most of these PMAY schemes generally would be of a larger scale. We need a banker's support, not only for the promoter, also to a subsidy that I think some CLSS or something they say that to pass on to the customers. Number 3, the GST impact, because this is an indirect benefit. Number 4, which is a RERA, how I structure the project. 5th is the income tax. Now income tax is done and dusted. There is no more extension of the income tax benefit, and hence we'll started looking at these 4 aspects in the PMAY, madam. All the 4 has to be put it on the paper and arrive at the reasonable, logical, and with the numbers. Always we work with the numbers as a professionals. Numbers talks better than any words. So if we satisfy these 4 things, then we have to go with the way that it's more beneficial to the stakeholders.
Okay.
As I mentioned again, this 15%, why I'm saying is, we restricting ourselves only to listen to the promoters. Please pull a plan and check what is this 15%, and if I able to bifurcate and a separate project which is more beneficial, please do that. But please ensure work for both, work together as a one project, because sometimes the ITC benefit may be more, the price sensitivity may be less. That point of time together is important. In case where there is a price sensitivity for a commercial versus residential is more, then move to the separate project. It all depends on the facts of the project and the numbers. So that is what is important when we consider to go with the separate phase or separate project under RERA or a single project.
That is, I think, the best takeaway from today's session, that we have to concentrate on the numbers, right? Very good.
Yes, madam. Yes,
Thank
true,
you so
madam.
much.
Yeah. Thank you, madam. So as I mentioned that section 3, explanation to section 3, which has the specific of the phase-wise registration, we can consider that, sir. So same thing which I mentioned, which also end up with saving the taxes and reduce the litigation, where if you have a separate registration for the commercial, separate registration for the residential, based on the scheme of the project. And of course, there should be a separate books of accounts to be maintained for the commercial portion and the residential portion. Of course, that may not be a big challenge as a professionals to maintain it, or maybe advise the promoter to maintain it. As I mentioned that this is the serial number 3 clarification given by the GST, which very much clear that in terms of the carpet area, and also how do we deal that, okay? And also which is clear that the carpet area of those units which falls under this only tax at the respective rates. And further it talks about as declared with the authorities, okay? That's where is very important, commercial or residential apartment as declared with the RERA authorities. So furthermore, it gives the stress upon the RERA advisors like us, like you. How do I declare to RERA authority in terms of the carpet area? Then one more definition, which is under GST also mentioned in terms of the RERA authority as per section 21. GST referred back to the RERA itself. Commencement certificate is the one more thing which is very important. GST doesn't have a definition for a commencement certificate. However, we have under RERA 2M, which has clear that like a commencement certificate means a certificate wherein the authority is permitted to start the construction. I think in Maharashtra you may call it as a IOD or something. We call it as a commencement certificate in the state of southern India. So generally this comes along with the plan sanction, and that is the document to talk as a commencement certificate. Why which is relevant in under GST? Friends, you remember there is a transition of 1/4/2019 where 5% without ITC is the new scheme for the real estate. There they mentioned that any project which obtained the commencement certificate prior to 1/4/2019 are eligible to retain the older scheme of 18% with ITC. In case of project which is not received any commencement certificate, they fall under 5% scheme. So this is what is the passing reference. Hence the commencement certificate under RERA is also important for us to look at the GST implication. Of course, there are other aspects to this to continue as the older scheme, which also talks about if you have entered into any sale deed. If you entered into any sale agreement with any of the customer, if you are committed that you are at the older scheme, still you are eligible for the older scheme. And also any construction activity which you have started where ITC is availed, then that talks about, okay, fine, still you are eligible for 18%. even though you do not have a commencement certificate. That is also we have seen few of the clients that point of time with those aspects also, with those clarifications also. As I mentioned, explanation to 3 of the RERA, section 3, which is very clear, you can have a multiple registration and each project will be considered as a standalone real estate project. And for the purpose of GST, each RERA registration would be considered as a GST. To that extent, 7th May 2019, serial number 30 of the notification, which is given by the GST, is very clear that in terms of the separate registered project under RERA, treat it as a separate registered project. And one more important is the definition of a promoter. How many of you have the complaints or cases or maybe advising to your customers stating that if you are a landowner, you are also called a promoter? How many of you saying that landowner, you are equally responsible as a developer in case of non-delivery of the project, the way that it is defined or registered with RERA or promised to the allottees? So this is very, very important differentiation which we require between the GST and the RERA. As we know that GST is very clear, they also define what is developer promoter, what is landowner promoter. Friends, post 1/4/2019, all the obligations are under the developer promoter. Landowner doesn't have any obligation under RERA post 1/4/2019. There is a forward charge on the developer, there is a reverse charge on the developer, entire GST liabilities on the developer promoter. So landowner is not into the GST net itself in terms of the project development, but whenever there is a customer sales, maybe he is responsible to that. However, under RERA, we know that there is a section 2 ZK which goes class 1 to class 6, runs about 1 page. Maybe this is the longest definition under RERA, which defines the promoter. It talks with a person who constructs or causes to constructed their ends. The causes to construct include your landowner or anybody else. So under RERA, the definition of a promoter include the landowner, wherein GST, landowner promoter has a separate role to play. As I mentioned, under GST, developer promoter has a role to play. There is not much impact on the GST, but under RERA, if the landowner doesn't complete the project, if the developer doesn't complete the project, landowner get into a shoe of a developer to complete the project for his allowance, various collected the money. Friends, we have appearing before the RERA authorities on the project which are not completed, which is a long pending for 10 years, 12 years, where authorities calling upon the landowner and also deliberating on to take over the project backed by the landowner and ensure that he completes the project. However, there is a pros and cons and also the financial feasibility, viability, additional cost required, everything is involved. But however, first recourse to the authority, first recourse to the allottees also say that you are the landowner, why don't you look at this as for the purpose of development. One more definition, we all know that there is something called ongoing project. Ongoing project, how it is relevant to the GST, and when the RERA was implemented, we have deliberated long sessions on the definition of an ongoing project. We know that proviso to section 3(1) clear that what does that mean an ongoing project, and also most of the states have defined the ongoing project to tweak and eliminate few of the project from the RERA clutches. We have seen maybe very few states have not defined the ongoing project. Most of the states have tried to define the ongoing project, but still they all did not end up with defining in a better way than the act itself. Actually, I always say that Act is more casual, more loosely structured for a definition of an ongoing project than the rules. Rules trying to simplify it but end up with the complication. We have seen that in most of the states, but luckily Maharashtra has not defined the ongoing project in its rules. It simply says that as per the Act, there's the ongoing project, and with that, there is no much complication with the Maharashtra. What it says, completion ongoing project in case of a project which have received the completion certificate as on 1/5/2017, as on 1/5/2017, then those projects need not to register under RERA. Those projects need not to register under RERA, and the projects which have not received the completion certificate as on 1/5/2017, they are liable to register with RERA. That is the explanation to the proviso to section 3(1). However, what this GST talks about with the new scheme of taxation, it talks about in case of a project which have received the completion certificate, and also first occupation has not taken place on or before 31st March 2019. Oh, sorry. Completion has not been issued for the first occupation. Yeah. Okay. If the project has not taken place on or before 31st March 2019, those are all called ongoing project, and which all the three conditions should have been satisfied to pass the test of the ongoing under GST. Okay. This is also one of the very favorite topic for me to deliberate it in a very lengthy manner when there is a deliberation with the promoters. Completion of development works in the project. What do you mean by a completion? Is Maharashtra is issuing any completion under RERA? What is the process for to state that project is completed? Can anybody explain to me, sir? Is anything under RERA stating it is a complete? Will RERA issue any certificate?
In the MARERA, they have given the formats form 4 to be uploaded by the architect signed copy, which certifies that the building has got the completion certificate, OC. Once the promoter get the OC, then form 4 is to be certified by architect and is to be uploaded. Thereafter, the regular compliances under the MARERA is not required, like filing all those updations periodically is not required. RERA itself does not give any such certificate that your project is complete based on your submitted documents. They don't give such thing.
Okay, thank you, sir. Thank you, Dilip, sir. Okay, if you deeply look at the certificate format which is notified by the any state authorities, any state RERA authorities, you submit this certificate. It may be architect or engineer certificate stating the project is complete. If you read word by word, I'm sure that the architect or engineer may not sign those certificate with the current status of the project. That is what is the difference. That is where it's very important. RERA also doesn't talk about what does mean a completion, on various deliberation with various stakeholders. We have reasonably conclude the completion of a project means whatever be the specifications, whatever be the promises the promoter has made to the allottees, if it is delivered, that is called a completion. It is not only a building completion by obtaining a occupancy certificate. It is not only that is a completion. All the amenities, all the facilities, all the equipment, all the NOCs is liable to be obtained to state that the project is completed in aspect. till that project is not completed. So this is what is our interpretation, our experience to state that it is completed. Because we know in various states something called concept of occupancy certificate. What does a occupancy certificate? RERA also has a definition of a occupancy certificate. RERA also has a definition of a completion certificate. Why there is a two definition if you say that both are one and the same? No, it is very clear that occupancy certificate has a separate definition, completion certificate has a separate definition. We all know that by reading of a definition of an occupancy certificate, the occupancy certificate is a certificate issued to state the building is ready for occupation with the water, electricity, and the sanitation. Only these three. This is a basic requirement. And also building is ready, please occupy. That is called occupancy certificate. But a completion certificate has a broader view, broader meaning. It says that whatever you promise is completed in all aspect is called a completion certificate. So RERA looks at the completion certificate, not at the occupancy certificate to state this project as completed. Friends, have you remember there is a section 17? Section 17, when the act was introduced, act was notified. Section 17 talks about what? The promoter shall execute a registered conveyance deed in favor of the allottees along with the undivided proportionate title in the common areas to the association of the allottees by when? Within the specified period of sanction plan as provided with the local laws. If the local laws are not there, then within 3 months from date of issuance of occupancy certificate. Remember that it's a proviso to section 17. In the same year, 2016, the act is amended within 3 months from date of issue of a completion certificate. That means to say that authority is also clear that it is a completion certificate. Act is also very clear. It is a completion certificate is mandatory, not the occupancy certificate. Friends, this is a one big risk most of the promoters are taking in terms of not levying of a GST. They say that occupancy certificate received no GST. Have you seen that in the advertisements? OC received no GST. In at least in the state of Karnataka, the OC, the occupancy certificate, means only a 70% of the building is completed. Like the ready to occupation, sanitation, water, electricity is obtained. That's it. There is not beyond that. That is called occupancy certificate. And the authority, the planning authority may not look into the other promises they have made. It may be a compound wall. It may be a STP. It may be a organic waste converter, or it may be a DG, the generator, backup power. So all those things the planning authority may not consider for the purpose of issuing the occupancy certificate. If you take a stand that occupancy certificate is a certificate, post that GST is not applicable, it's a very wrong stand. I'm sure that one day the GST authorities can invoke that after occupancy certificate, you have spent 30% of your money towards the project. Then how are you claiming that project is completed? So that where is the fix it. Of course, if the promoter is completed in all aspects of it and OC still is received the OC, it's okay. But large developers, in order to enter into a sale deed, in order to collect the balance demand of the money, they say that occupancy certificate. And the moment they say occupancy certificate, no GST also started promoting. This is a one more aspects promote as a profession should be remember, looked into while advising the promoters of the project. Okay, the difference of occupancy certificate and a completion certificate plays a very vital role, important role. I also heard from my partner Venugopal. Recently, GST is given a clarification. Occupancy certificate and completion certificate is one and the same. I do not know in what context they have mentioned that, and I have a different view on that in terms of the OC and a CC. Rashmi madam, please.
Yes, can you repeat this last thing that you said? The last 2-3 sentences. You have.
Occupancy certificate is different than a completion certificate.
Okay.
Okay.
In
That is
what
what
respects do you feel?
Madam, there is a definition of a occupancy certificate in the Act itself. There is a definition of a completion certificate in the Act itself. So completion certificate is defined under section 2ZQ, and also the occupancy certificate is defined under section 2222. 1 second, madam. 2ZF. Okay, occupancy certificate generally issued by the authority where there is a water, electricity, and a sanitation. Right. But completion certificate has to be like issued by authority or otherwise stating that the project is completed in all aspects, wherever whatever be the promises made by the promoter to the allottees by way of specification or the marketing collateral. If everything is completed, then it is called completion certificate. I do not know how many are you aware of the Gujarat RERA practices. Few of the Gujarat RERA practices is too good. Sir Dilip sir, you mentioned by architect certificates certifying that project is completed, that becomes the end of it. But Gujarat RERA will go to an extent where the promoter shall register the societies, allottees of association under respective laws, open the bank account of the association, transfer the corpus money which is collected to the association, attach the bank statement to the authorities to state that we have done it. That means the project is completed. Remember, which is one of the mandate under section 11, one of the function of the promoter under section 11, where he enable the formation of an association. Also, I think in some of the section which also says that he has to maintain reasonably the project till he hand over. When he hand over, certainly there is a unspent money which is collected shall also be handed over. So RERA goes to that extent. That means to say we have to look at the bigger picture of the performance, bigger picture of all the obligations of the promoter has been considered. We have a case. Project is delivered way back in 2004. We are 18 years. The builder has not handed over the corpus to the association till now. It's about 14 crore rupees. 14 crore rupees of the corpus funds which are collected from the association. Till now, they have not handed over to them. Imagine what would be the fate of those association, until when they will fight it and to what extent they fight it is the question. Of course, initial days he promised some of the benefit out of this corpus funds, paying some interest which is 4% more than the bank rate of interest. But over the period, we know that because of whatever the various financial challenges, he stopped paying it. He started paying alternative months, started paying 4 months once, 6 months once, 1 month once, 1 year once. In the past 6 years, he started paying it, stating that I'm not good at financial aspects of it. So this is what is something called completion of RERA under completion of project under RERA. As also say that GST is not applicable if you receive the completion certificate or the first occupancy. This is one more aspect which I do not know anybody has come across on this. We know that there is a delay compensation which is adjudged by AO or maybe the authorities. The money which they received by the individual allottee, will that attracts any GST is the question. As of now, I do not have an answer. This is a slide which I have included at the end of my presentation. And if you have anybody has an answer to this, please let me know. Otherwise, I'll come back to you by discussing internally with my GST partners. So we have seen that the delay compensation are as high as 10 lakhs, 20 lakh rupees. If the allottees have some other business which is taxable business where is levy is paying the GST, if this amount also included which crosses the threshold limit, whether those amount also liable for GST, we should look at that. Why I'm saying is these orders are available in the public domain, and if some clever GST officer pull out one of the order and see that what is the compensation which is awarded to this customer or allotee, and why don't I include him as part of GST? Okay, my worry is not about to pay the GST. In many a time, builder will not pay the compensation itself. He go to an appeal, he'll go to somewhere else, or he'll be silent about it. He'll vanish also. In that case, because I'm accrued, that income is accrued to me, I'm liable to receive from the customer, builder, but I've not received. If I am following the accrual system of accounting, if the GST officers say that you pay the GST on the money which I don't know whether I receive or not, is a bigger thing. So this is the thought I wanted to mention to the participants. If you have any better answer to it, let me know on that. Something related to the cost factor. Because of the RERA, there is a 5 years of defect liability, and will the cost will go up. Also, there is a consciousness about the quality of the materials in which the promoter use it, how that impact on the GST, quality of the material and the warranty defect liability of the 5 years. Certainly, there is an increase in the cost of RERA, but GST something like because of the cascade elimination of the cascading effect, bringing transparency, bringing large revenue to the country itself, because we all see that 1.5 lakh crore rupees per month. Now the country has a picture. Now I receive 1.5 crore rupees, 1.5 lakh crore rupees of every month. I have 18 lakh crore collection from the GST itself. I can forecast, I can project myself which cost should be reduced, which cost have to increase it, what is the pattern of the contribution, so that would be the one way to look at by the country as a government itself. I'm sure that GST by the real estate contributes substantial part compared to any other industry. Any other industry, I can tell you, we all know that about 247 industries work around the real estate industry. 247 different industries work around this industry. Means all those 247 industries has to contribute to the GST itself. So to that extent, there is a contribution from this GST enactment, which bring down the rate of GST at the long run. This is one of the aspects of the quarterly update. Dilip sir has mentioned in his initial introduction, there is more transparency, there is more available data in the public domain, in the RERA, especially the real estate, about these aspects: status of development work, percentage of completion, cost incurred towards the construction, other costs incurred, number of units sold or unsold, date of agreement, amount realized, deposited, withdrawn, status of completion of the project, and along with the photographs and the professional certificates. Imagine this information is a quarterly update and which will go to into the RERA website. Tell me, do you need anything more than this for somebody to assess the project, assess the development of the project, assess the sale or the unsold, assess the cash flow? I don't see any other information is required other than that for me to say something about the project, say something about the profitability of the project. Is something which I always excited when somebody gives about this information. I give a clear information about this is all about your project, this is where you landed, this is how it will happen, and this is how the statutory authorities will look at you as a project promoter. As I told you, what is that we have reported to the RERA authorities at the time of registration, which is in a public domain. As quarterly updates, as I mentioned that it's a very important, generally my experience is very few promoter gives importance to this quarterly updates. I have a wonderful clients. They ensure their management has to sign on this quarterly update sheet before it goes into the RERA portal, because they know the seriousness about this quarterly updates. They know the impact of this quarterly update, because they learn their business out of their experience, out of their past, what I can say is bad experience or good experiences. So always we say that who involved in preparing these quarterly updates, how serious an organization, how serious the project is preparing these quarterly updates while submission to the authority, and a professional as a chartered accountant, how serious in terms of collecting the information from the promoters while issue a CA certificate, engineer or architect certificate. Any misreporting will have a direct impact on the profitability of the project, viability of the project, and the net worth of the promoter himself, and which is finally, which is a transparent, which is availability with the authorities at all point of time. And the bigger challenge which we face is, it is not the GST or the income tax, it is a RERA itself, because we know that section 59 onwards, there is a penal provisions. What does the penal provision talks about? Section 60 talks about 5% as my, up to 5%, the authority can levy a penalty for any non-compliance of other than section 3. That means it's a 5% of the project cost. Straight away, my bottom line is eliminated to an extent of 5%. Have you come across any law till date to take away your 5% of the cost of any project? No, this is the first law which I come across in my 20 years of my experience. Harsh, very harsh in terms of the penalty. And in spite of that, industry is not awake. In spite of that, industry is not seriousness about the importance of the data which goes into the RERA, importance of the communication they made to the customers or other various stakeholders. Again, the completion, this is a one more big aspect to be discussed. What do you mean by percentage of completion? Who issue the percentage of completion? Which percentage of completion should be considered for my certificate? And is AS accounting standard or tax standards are same as RERA? And as a financial percentage of completion to be considered, or architect percentage of completion to be considered. If I consider financial percentage of completion, in case of a borrowing cost is more, administration cost is more, then my percentage of completion of the project is more than what is the physical development of the project. This is a one more area which at this point of time everybody is silent. The fire is before, like below the carpet, and it takes its time for to evolve on this and issue a standard of the percentage of completion. Then comes under audit under RERA. I hope most of us issue the certificates under RERA audit, which talks about two things. What is money collected during the year? Money collected till inception. What is money withdrawn, or money withdrawn till since inception? Whether these things are in percentage of withdrawn is percentage of completion of the project. This is what only 2 paragraphs. In my view, it should be beyond that. And if somebody read the first paragraph of the this report, this audit report, it talks about I certify, and also it says that all provisions of RERA is complied with that. Then not only these two things, other provisions are also required to be looked at that. So always I wonder how the audit of RERA audit, if anybody comes as I wanted to get an audit of a project under RERA, how do I look at that? Have you experienced there is a project of the same project, you have a multiple phases, and if the multiple phases is called multiple project, in an entity you will have a multiple projects. The project is a multiple locations, I can say Bangalore, Hyderabad, like that. And also this group has a multiple businesses. Say example, best example I can say is a Godrej. Godrej has a multiple businesses, and under the group you have a real estate business. Under a real estate you have a multiple locations, multiple projects. Each project has a multiple phases, and the smallest is of a multiple phase in one registration is called a project. So when I do an audit and issue a certificate, how do I remove a thread for the purpose of registration is for the purpose of my audit is important. These are all the various information we should understand before we start the audit. And why I'm saying this is which has a direct impact on the GST. Because I issue a certificate, what is the cost incurred and also what money collected. Can the certificate is sufficient for a GST officer to assess what is incurred, what is collected, what is incurred for the purpose of RERA, for the purpose of GST assessment? Generally, what is incurred, where is defined? Where is the cost incurred? Where is that defined in RERA? RERA does not define it. Maharashtra has defined something. AP has defined something. But GST is a central act. Will they consider Maharashtra cost incurred as a concept or a AP Andhra Pradesh cost incurred as a concept? No. So we generally know that cost incurred is nothing but the cash flow outflow plus also liabilities accrued. So combination of a cash and a mercantile is something called cost incurred. Okay, I have written this cost incurred as a separate article which is available in the tax group. If you have any time to read that, please read that. I have mentioned that what is the cost incurred, how it impacts. So how to read the cost incurred by a professional and the authorities. So this has a straight away impact. Say an example, cost incurred is 10 crore rupees as per our certificate. But in the GST returns, you have shown only 6 crore rupees as the cost incurred. The authority may come back and say that is 4 crore rupees you incurred and you are not discharged it. Similarly, money collected. What I have collected, I have mentioned it. What is this collected? Whether it's including pass-through, not pass-through, what I have declared to GST may be different. I'm not saying that there will not be a difference. There should be a difference. If there is no difference, then we have to suspect. If there is a difference, then I have to reconcile. If I don't have anything to say, both are same. If assets and liabilities are more, both are same. Where is my work, man? If there is a difference, then I have to work it. Similarly here, GST or the RERA values always should be different. If at all, if there is a same, then you have to suspect. Okay, and reconciliation is a must to prove to both. So I'll take another 2-3 minutes. A very, very important case laws which I personally appeared and argued on those things. And one is a national anti-profiteering orders, which we all know that there's during the transition of 2017, any profits out of the GST transaction has to be passed on to the customer. That is called anti-profiteering. And this project is 2014 project, which is again the project of Shapurji Palonji. And while obtaining the RERA registration in 2017, they declared as 53% as completed. But however, he collected 72% of the money from the customer. The promoter has passed on only 2% of the future demand as anti-profiteering against 28%. The allotee have failed to complete before the National Anti-Profiteering Authority. And this is the information have called by the authority. About 22 different documents have collected, which goes like this, almost about 1,500 pages submitted. And this is a calculation we have given to the authority, where I have paid 72%, and each unit, the credit given is about 15,911. If you see the third table here, it talks about 15,000, and wherein we calculated say that shortfall of the giving credit is 1.37 lakhs per unit, and they have to liable to refund it. And after going through everything, the authority has passed the order, to refund 3.13 crore rupees of money, distribute 1.13 crore rupees, return to such eligible recipients. This is the order passed by the authority. Okay, so this is what is the outcome of one of the impact on that. Where the data is available is data available in the RERA, because they reported with RERA 53%, wherein money collected is 72%. If at all, if somebody had visualized this would be the one challenge we should look at, that they could have saved about 3.13 crore. Not only this, against that any delays they do, they have to add interest and give it there. So this is what is the one of the order of the national anti-profiteering. And also one of the other case we have appeared before Karnataka RERA and also appellate. So it is a Mahindra Homes Private Limited, where the builder says that he will not pass on the, he will not refund the GST amount on cancellation of the unit. Authority has passed the order to refund the GST amount, and also the promoter has appealed against this order of the authority, and finally at the appellate has passed an order. The promoter has not made sincere attempt to claim the refund of GST, as well as the of course, there is a deduction towards 5,000 stamp paper, refund of GST during the relevant period, and simply withheld the said amount due to allotee on the pretext that allotee shall have approached the concerned authority to take a refund. So with this, the tribunal, RERA tribunal has passed an order stating the promoter, directing the promoter to refund the GST collected from the allottees. So this is the two important. Personally, I have appeared before RERA relating to the GST matters. So which is very interested for me during the entire tenure of this. So with this, I am concluding my presentation, sir. And any specific questions related to that, I'm more than happy to explain or share my views, sir. Also, I wanted to listen from the participants in case of anything which I left out, or if I may be wrong in GST matters. Can I have the videos of the participants, sir, please? Always. Sometimes I feel that whether I'm talking myself. Okay, I request the participants to switch on your videos, please.
Yeah, great.
Yes, hello, sir. A very nice
sir.
session. Thank you very much.
Thank you, sir. Thank you so much, sir.
Thank you very much, sir.
It's my pleasure, sir.
Yes, sir.
Yeah.
Good. Anyone, any question?
With the question of network bandwidth, otherwise we would have switched it on.
Okay, no, understood, madam. Just
everybody
on the
was listening to you.
Yeah. On the lighter note, I wanted to, because many a time I feel that like I'm talking alone. Okay. Yeah. During the COVID time, I used to hear a lot of Girish Ahuja sir talk. He always insists, please switch on your cameras. I don't know whether you are there or not. Okay. Okay. Yes, sir.
I also used to tell participants, please be at your home. This is your home.
Yeah.
Don't keep yourself away. We are losing you and not connecting with you. Same thing, you are not connecting with us. It's always be interactive and have face-to-face. Good.
Yeah.
First of all, sir, since you have attended all the questions during the session, I think most of the questions in the mind has already been taken care. And from the perspective of being deputy convener of the RERA study group, what I could see, this session was really worth. And you could prove what you had written in the topic. I was not connecting. I was just saying from my perspective, intricacies related to GST pertaining to the real estate. And that perspective now shifted to the different thing which you have in the shorter time broadly covered. And I think at least I can see myself, I am taking away from your deliberations, first of all, phase projects versus GST. You have connected it very well. I was not much aware about GST and I was ignoring कि यार जाने तो अपना रेरा से हटके क्या करना है जितना there are lots of knowledge on the planet and rather going in different area and developing my own tensions for updating myself for the benefit of the promoter and for some professional income, rather stick to the one area, it will be good for me. for my health also. But now listening you, it would not take much time from my side to connect. Yes, these are the very critical part. When we say we are the RERA advisors, then what advice we can give until we know these basic fundamental things? How details provided by the promoters uploaded on the site, even we don't know much, then how the promoter will come to know, other than the hardly 5-10% of the total industry promoters. Those are having the legal backing of the solicitors and those people. They may be fully aware about such impact, but most of the promoters are not aware. They are just compliant. And some of the things which you brought very minutely, lucidly, which I could see section wise, the key points. You did not read all the definitions, but you pointed out how it is impacting as a RERA practitioner. And at the same time, I could see for the chartered accountants certifying things, what are the vision we should carry with our professionalism. Simply RERA area and estimated cost and putting that and putting one note that these have been collected from the other professionals is one of the area. No doubt it can safeguard our, but whether it will justify we being extraordinary in the field. Correct. Now it has opened up for me, and other many things which I could not written here, but I could also caught one thing, 15% for the commercial units. If it is separate project, obviously promoters are showing separate project, but now I could see that separating it, being on the same plot, still GST will not be applicable on the residential. It will continue to enjoy the GST at the lesser rate, specified rate. And affordable housing also, you have given one example. A lot of things has been taken away. I think our members, I couldn't see such kind of things have been shared in the many seminars. They have been very, they could have been based on the some of the judgments. And if one can take 1 or 2 judgment, it can consume 1 or 2 hours. But if small things are brought into this smaller group, and it's a really great achievement for all of us. And therefore, I really, from my bottom of heart, I propose a very hearty vote of thanks on behalf of the Western India Regional Council RERA study group. And I request every member to join your hands and give a loud of applause to the speaker.
Thank you, sir. Thank you so much. Thank you so much, sir. Thank you. Yeah.
Thank you.
Yeah, I wanted to conclude with a small word, which sentence always I say that the subject has so much in it, sir. It is not the speaker, it's always the subject. If the subject has a stuff, speaker will deliver it. So the same thing is in RERA also. Subject has so much in it, and it's up to the speaker to take and present it to the participants. That's only I can say about it, sir. Thank you so much. On the working day, you took the time and be here, and for the 2 hours of session. Thank you so much. And for WIRC to including the SIRC member for the session, sir. Thank you so much once again, sir.
Thank you very much, sir.
Well.
Thank you. Thank you very much, sir. Thank you.
Thank
Good
you
night.
very well. I
Thank you.
request I am concluding this meeting.